No, I don't think Basel will kill trade finance. There is a challenge, right? No doubt about it. I would say the regulators are not discriminating against trade finance. They are absolutely not discriminating against trade finance. Some of the policies may have negative impact on trade finance, but regulators and the Basel Committee, these are responsible people. They do take feedback from the market. They do listen to the feedback from the market. I think what's more important is for the businesses, for the banks, for the regulators, an open, ongoing dialogue. That dialogue, I would say, could be better. And that dialogue is not through the FT of the world. That dialogue is not through the Wall Street Journal of the world. That dialogue is through face-to-face interactions. The way that we have been doing it for the last 100 and 200 years. All right, let's get together in a room and have a chat. And I think that's what we need today. All right, for us to close the gap in terms of understanding expectations, current policies, future policies. Because at the end of the day, Anita, we all have common objectives. We all want to have a strong, robust banking system. We all want to have a sustainable banking system. I don't believe that any one of us, be it in the banks, in the businesses, or the regulators, will have any difference in that end state objective. I think the average regulators know that trade is not as risky as a CDOs. All right. I do believe that the general population out there understands that. It doesn't hurt if we have numbers to prove it. Right? It does not hurt. And I think that's where ICC is adding value in the whole process. ICC has conducted a study across 9 global banks using data from 9 global banks. Over a period of 5 years, inclusive of the 2 years of financial crisis. 1.2 million transactions. And out of 1.2 million transactions, the default was 1,400 plus transactions. Low 1,400 transactions. Now, you don't have to be a mathematician to know that 1,004 divided by $5.2 million is a statistically insignificant number. What's even better, Anita, is, as I mentioned, it includes the 2 years of crisis. Even with the 2 years of crisis, the default during the 2 years was approximately 400 plus transactions. Over 2 plus million transactions. Again, statistically insignificant. So, while the data may not be perfect, but I think it's sending off the right messages in the right directions. And I do believe that the regulators are listening. We may not see results in the financial price tomorrow. All right, we may not see a press release by the Basel team tomorrow, but I do believe they are listening, and I do believe that with time, with a bit more patience, things will change for the better. I'm optimistic about it. I have another role, and I'm also the ICC banking chair. In that particular capacity, I'm very, very committed to help the business community to make sure that their concerns are being addressed. If not, the current regulations, if implemented, can be fairly punitive on the businesses. We will see trade pricing going up anywhere between 20 to 40%. We will see trade financing capacity going down by 6%. At the end of the day, banks is just going to pass the pricing on to the businesses. If there's a reduction in financing capacity, it's the businesses that's going to be deprived of the liquidity. So in that particular role, as the chair of the ICC Banking Commission, I'm absolutely committed to make sure that the larger population hears this message, that the regulators understand the concern of the businesses, and policies can be refined to address some of these gaps. I think the danger is always there, and the possibility is always there. A lot of people have said, China, 6%, is it realistic? Are you over-exaggerating? But truth be told, Anita, even if it is 2%, it will send the price going up. The price, the supply and demand and the price volatility, supply, demand, price volatility is not a straight line relationship. It's an exponential relationship. A 1% reduction in capacity does not mean a 1% increase in trade pricing. You know that. You try to reduce the supply of wheat by 1 or 2% in the world. You want to know what will happen to the price. Right? Trade financing, provision of liquidity to the marketplace, is no different from the wheat. It's no different from the crude oil. A reduction of, forget about 6%, even a reduction of 1 or 2% will send the price skyrocket. We have time, Anita. We have time to address some of these gaps. And that's the reason why at the beginning of this question, I say dialogue is important. An open, honest dialogue is important.